Hello students, let us start today's session. In today's session, we are going to study a new concept which is back flush. You can call it accounting also and you can call it costing also. So the concept name is back flush accounting or costing. Very easy concept. Very easy concept. You have to solve 2-3 questions, practical questions, as well as theory is also important of this concept, back flush accounting or costing. Now we have to do exactly what in this concept, back flush accounting or costing. As the name suggests, accounting or costing, we have to prepare accounts. We have to prepare accounts. We have to pass entries. We have to pass entries. We have to prepare accounts. Now accounts can either be prepared, we can call our accounts as financial accounts. In finance we do that, or we have also learned how to prepare cost accounts. At your inter level you have prepared your how to make cost accounts. You have learned that. You have learned integrated, if you remember, integrated or non-integrated cost accounting system. You have learned that. But I know many of the students might have left this chapter at inter level. So not a problem. Integrated or non-integrated cost accounts. So do not worry if you have left this chapter at inter level. We do not have to learn this chapter again. No, we do not have to learn this chapter. We just have to understand the difference between the traditional cost accounting and back flush cost accounting. There is a difference between back flush cost accounting and the traditional cost accounting that we have learned. This is your traditional cost accounts that we have learned in inter level. Okay. So what I am going to do, how I am going to teach and structure this lecture is, first I am going to teach you First I am going to teach you this portion. That is, I am going to give you a very small example how cost accounts are made. Okay, how finished goods account, stock accounts, raw material stock account, work in progress account, overhead account, cost of goods sold account is made. Very small example I will take up, and then I will tell you how is your traditional cost accounting is different from back flush accounting. Practical portion I will explain first and then I will switch over to theory portion. Okay, so let us start understanding the concept of how cost accounts are prepared. So first target is to understand cost accounts, normal accounts, with the help of very simple example. I am taking a very simple example. Okay, now this is an example. Prepare cost accounts for the month of March. Okay, these were the transactions which took place in the month of March. Now there are two types of cost accounts you can make. Either integrated or you can make non-integrated. Now basically we normally make integrated cost accounts. Okay, but in integrated cost accounts, there is a duplication of accounts. I'll tell you how. In integrated cost accounts will be made. Cost accounts will be made plus some financial accounts will also be made. For example, cash account, debtors account, creditors account. These accounts will also be made in your cost accounts only. Okay, so let us first understand what cost accounts are prepared. And why is it prepared? What is the purpose? Our purpose is very simple. We just want to we just want to record what? We just want to record only financial transaction. If financial transactions are supposed to be recorded, we can see the financial accounts. In cost accounts, we record the movement of material. We record the formation of work in progress. How much work in progress is growing. So basically we are recording when raw material is purchased, when raw material is transferred to your production floor, when you send the raw material from storehouse to production department, that should be recorded somewhere. The movement of raw material within the organization, within the factory, that is recorded. When some expense is done in manufacturing the work in progress, that should be recorded. When some portion of work in progress has been finished and finished goods have been done, that should be recorded. The portion of finished goods which are sold, that should be recorded. This movement of the stock, raw material, work in progress stock, finished goods stock, that when we record, that is called cost accounts. If still not getting an idea, let us take this example. Okay. Now please observe this example. This is a very small example to understand the cost accounts. Okay. So I am going to prepare integrated cost accounts. That means I'm going to prepare cash account, debtors account. It's just not only the stock movements which I'm going to show. Other than that also I'm going to prepare cash, debtors, creditors, whatever will be required. Okay. Now they are telling, see, observe the transactions. See, you have purchased the raw material stock. You have purchased raw material stock worth 1 lakh, right? And out of 1 lakh, you have issued for production only 80,000. That means now 80,000 worth raw material is being used and it is in the work in progress now. Finished goods are getting produced out of it. Overheads incurred are 70,000. Overheads applied means how much overhead should have been incurred is 60,000. Applied, absorbed, recovered. I'll explain that also. Finished goods produced. Now, after doing all the raw material issuance and expenses, all the conversion cost you have incurred, finished goods produced and transferred to warehouse. Now again, we are watching the movement of the finished goods stock. How much finished goods have been produced? 1 lakh. And cost of goods sold is 80,000. Okay. Now what I'm going to do is, I'm going to prepare accounts. Okay. And yes, I'm going to prepare accounts. Now what accounts we are going to prepare? This is very important. Please observe. See, my purpose is, first I am going to record raw material stock. Main 3 accounts which we make in our cost accounts are work in progress account, or you can say work in progress stock account, and we make finished goods stock account. Okay, these are stocks. So these are assets, right? Below, now here it's going to be my overheads. You can call it overheads control account also. This green account is going to be my cash, or you can call it as creditor account for time being. Or let me write it cash account only. Okay. Next account is cost of goods sold, and last is your costing profit and loss account. Now do not get worried with so many accounts. You'll just try to understand the movements, how stock is moving. Okay. See, these 3 accounts is your assets. These 3 accounts are your assets: raw material stock, work in progress, and finished good stock. Now what happens is, observe each transaction. Raw material purchased 1 lakh. Okay. So raw material has been purchased. So your asset is increasing, your stock is increasing. So I'm going to write here 1 lakh rupees. And obviously you must have paid in cash. So here it will be written cash outflow would have taken place 1 lakh. Now here it will be raw material stock account. To and by you can write. And here it will be cash account, right? Okay. So here it is going to be to, and here it is going to be by. Now your asset has increased by 1 lakh. You have now in go down, please observe, in go down, now you have 1 lakh rupees of stock, right? Now is it lying in the go down only? No, in the month of March you have issued, you observe here, you have issued raw material for production of 80,000 rupees. That means from go down, there is a movement of stock to factory where work in progress is taking place. So I am going to do the same movement. I am going to write it here. I am going to transfer 80,000 to work in progress, because now my raw material stock is getting converted into the another type of stock, that is work in progress stock, and my go down stock will decrease by 80,000. So here my asset is decreasing. I am going to write here work in progress stock account, and here I am going to write to raw material stock account, right? Now my work in progress stock account has increased. So if you see, my assets have this shows the movement of my stock, and by this we are valuing our the finished goods that we are creating. we are trying to assign cost to it. So we have assigned 80,000 cost to the goods that we are manufacturing, right? Now the second entry is overheads incurred 70,000. Okay, so overheads incurred. Now this is overhead account, so it's an expense. Let me write here. So overhead and cash, or either there are creditors or there are cash. So I'm going to write here 70,000 your expense is there, and by you must have paid in cash, so it will be written here. It will be written here overhead control account, and here it will be written to cash account. Now this is an expense. Now what most important thing which many students don't know, in costing, when we value finished goods, we value at standard cost. What is standard cost? What is standard cost? In cost records, see, if you want to know actual expenditure, please go and check in financial records. Financial records will tell you what has been spent. Cost records tells you what should be spent. Please, this is very important. What should be spent? What should be spent means how much should have been spent. So in cost records, we value finished goods. Please understand, we value finished goods, work in progress, finished goods at standard cost. What should have been the expenditure? What should have been the expenditure? Now how does that impact my entry? If you observe here, it is written that overheads incurred is 70,000, but how much overhead should have been applied, incurred, or what should have been absorbed is 60,000. This word applied denotes standard cost. Instead of applied, other words could have been used, recovered. Other words could have been used, absorbed. These words tells you how much should have been the expenditure. Now what you're going to do, so that means from 70,000 overheads, 60,000 overheads should have been incurred, right? But you have spent 70,000, no problem. We have incurred 70,000, fair enough. But in cost accounts, we value our work in progress at standard cost. So what I'm going to do, I will add this expense. I will increase my value of work in progress. I will add here to overhead control account. I'm increasing the value of my work in progress, but I will add here only 60,000 because I want to show how much should have been the expenditure or the value of work in progress. So here I will write here by work in progress account, and I will transfer here 60,000. And this is 10,000 is my loss, and loss always goes to profit and loss account, which I will show it later. This is my unabsorbed overheads. This overhead will not, see, you cannot sell your finished goods. Okay, let's come down to very basics. Why are you so much interested in knowing the standard cost of work in progress of finished goods? Because when you fix selling price of finished goods, you have to fix it at how do selling price is fixed? Selling price is comprised of cost plus profit margin, whatever profit margin you want. Now here, what cost will you charge from your customer? Can you charge from your customer actual cost? Answer is no. Customer will not pay you actual cost, customer will pay you standard cost. Hence, you need to find out standard cost. Can I charge my students the actual cost I have incurred in creating these lectures? No. If I spend more than required, will you pay me? Answer is no. You will only pay me what is right, what should be the right cost. Otherwise, I will be out of the market. Hence, in order to fix selling price, we need to know standard cost, and standard cost is known with the help of cost records. Costing records the cost of work in progress finished goods at standard cost, and which is fairly this target we are achieving. Now you can observe here, work in progress asset, which is a stock, is valued at 80 plus 60, 1,40,000, which is the standard cost of work in progress. Even you have incurred 70, this 10,000 is your loss because you have incurred additionally. Okay. Now, is this work in progress stock of 1,40,000 is any good finished out of this? Answer is yes. They have written this finished goods produced and transferred to godown is 1 lakh rupees worth. So okay, fine, that means out of 1,40,000, this total 1 lakh units, 1 lakh worth of goods have been produced. So work in progress stock is no more 1,40,000. So what I will do, I will transfer work in progress stock to finished goods stock account. So I will write here by finished goods, let me write it, by finished goods stock account, and I'll write here 1 lakh. Now from this stock, my stock is getting transferred here, and I'm going to write to work in progress account. How much? 1 lakh. Now my godown, this is representing my finished goods stock. Now I know how much is left by balance brought down. Work in progress, you know, now balance is how much? 40,000 is left here. 1,40,000, 1,40,000, and now finished goods stock is how much? 1 lakh. In go down, you can see the stock is worth of 1 lakh, and this 1 lakh represents the standard cost of goods produced. Okay, not the actual cost. Actual cost, even. Let me tell you, from here, please pay attention. From here, you have transferred 80,000 to work in progress. Supposingly, out of this 80,000, they have said that there is a price variance of 8,000. How much variance? 8,000. So that means adverse variance 8,000. That means you have spent more price, you have spent more money in purchasing this raw material 80,000 worth. If I say that out of this 80,000, 8,000 is variance, price variance, which is adverse. Only 72,000 should have been spent. Then I would have transferred only 72,000, and remaining 8,000 I would have shown as variance account, which will be transferred, which will be your loss, and will be transferred to profit and loss account as a loss. In computing net profit, your net profit will reduce by this amount. But here I will transfer only that raw material which should have been incurred. If there would have been a price variance adverse and 72,000 should have been the cost of raw material, I would have transferred here only 72,000. I hope you are getting what I am trying to say, that work in progress stock will be valued only at standard cost. Okay, now going further, yes, now we have written here. So we have understood that work in progress will be valued at, work in progress stock will be valued at, because that is the purpose of cost accounts. Okay, so work in progress will be valued here, and from work in progress whatever is manufactured, that will be transferred to finished goods. And now, is total 1 lakh worth of goods lying in your godown? Answer is no. Out of this, cost of goods sold is how much? 80,000. 80,000 worth of good cost of goods have been sold. So that means your stock has reduced by 80,000. So from here, this will go here. So cost of goods sold by cost of goods sold account, how much? 80,000 will write here. And now your goods which have been sold, the cost is 80,000. This is the cost, right? And cost, now this is an expense. Account is debited. Now all these expenses, all losses will be transferred to profit and loss account. Okay. So here I will write to finished goods stock account. And now obviously the balance here will be how much? By balance carried down. 20,000 is still left in your stock, in finished goods stock, right? In finished goods account stock, still you have 20,000 rupees of stock. Now cost of goods sold here, please my dear students, cost of goods sold here is there. Now this is an expense, this will be transferred to your costing P&L. So from here it will be transferred to costing P&L by costing P&L. Here credit, so in costing P&L it will be debit, right? So 80,000. So in costing P&L, cost of goods sold, debit side, right? You very well know in profit and loss, all costs related to goods sold will come here. and all the losses will come here. Now what losses you have suffered? In overheads there is a loss. In overheads there is a loss of 10,000 because this is an cost which should not have been incurred. Customer will not pay you. So I'm going to write it here as a loss. I'm going to write it as a cost. So I'm going to transfer this loss. This is loss due to over absorption or under absorption? Under absorption. Let me write it properly. Under absorption. So we have received here. From here it will come here. So it will be over. See here credit. So other account is being debited, right? 10,000. And then in our example there was no raw material variances. All the variances, whether adverse or favorable, that is gains or losses, will be transferred here. And then whatever your sales are, which is not given in the question, whatever the sales that you will write here, and then remaining amount will be your costing profit or costing loss, whatever it is going to be. Yes. So whatever, it can be loss also or profit also, but since sales is not given to us, so we cannot find costing profit and loss. But what I wanted to show you here is that this is the normal cost records we make, and because of these records we are able to find out the cost of goods sold. Which cost? Thus now let us check whether you have understood this or not. This cost of goods sold represents actual cost or standard cost? Please reply. It is going to be standard cost, because this cost of goods sold is coming from finished good, and in finished goods account we have transferred work in progress amount, and in work in progress stock account only standard costs were transferred. Standard cost, the cost that should have been incurred. So now I hope you know what is the purpose of making cost accounts. Now these were taught in inter-level. Now our topic is not to learn cost accounts. Our topic is very simple. Our topic is backflush accounting. Now what is backflush accounting? In backflush accounting you are not supposed to prepare all these accounts. No. So let us first do a quick revision again of the accounts that we have made, and then I will tell you which accounts we are going to remove in backflush accounting and why. Okay. So first of all, what we have learned till now is that these are the basic accounts that we are going to prepare. Raw material stock account, work in progress stock account, finished goods stock account, then expenses, whatever expenses, overheads account, then cash, bank, creditors, other that those accounts will be also be made, and then cost of goods sold account, and then mainly costing profit and loss. Now whatever raw material is purchased, that is kept in stock in the warehouse, this represents your warehouse stock, and whatever stock is sent to factory is transferred here. Now that stock converts into work in progress stock, but only you have to write here standard cost, not the actual cost. Standard cost will be written here. Thereafter mentioning, and overheads also will be transferred here. So basically we are valuing work in progress at standard cost. Only standard cost is transferred. Whatever overheads are incurred, they are written here, and whatever is absorbed is written here, or applied, or what should be charged. Okay. Then out of this work in progress, whatever finished goods are completed will be transferred to finished goods stock account. Obviously this is also standard cost, since these are standard cost. Then out of finished goods stock, whatever goods have been sold, this also represents warehouse. Out of this finished goods stock, whatever goods have been sold will be transferred to cost of goods sold, because that is the item has been sold, so that it is no more a asset. Now that will become a cost of goods sold. So this will be cost of goods sold. Then cost of goods sold complete amount will be transferred to costing profit and loss. So if one side is getting credit, then other side is getting debited, right? This is how the performer is completely. So now we have got a basic idea how cost records are made. Integrated cost records. In integrated cost records, we have learned that cash account or creditors account, account payables account can be made in your integrated cost accounts. Otherwise, our cost records basically comprises of the 3 stock accounts: raw material stock account, work in progress stock account, and finished goods stock account. Now let us come back to our main topic, which is backflush accounting. Now, how does backflush accounting is different from your integrated or non-integrated cost records? Now, see, the basic difference is both are cost records. First of all, you have to understand both are cost records. You can prepare your cost, you can do your cost accounting. Cost accounting basically means what? Basically, it implies finding out the standard cost of finished goods. When you prepare a cost sheet also, there also the cost of goods sold which is arrived is your standard cost only. Okay. So basically purpose is to find out the goods which have been sold or manufactured, what is its standard cost. Okay. For that purpose, we are making cost records. Now, cost records are made either through integrated cost accounting or non-integrated. In non-integrated, you do not make cash or creditors or bank account, and but other accounts are made. Okay. Now, we are not supposed to learn these two systems. We are not supposed to learn all this. We are supposed to learn in our lecture backflush accounting. Now, what is the difference between these two systems of accounting? Okay. Now, in this system, please, now this is very important. Now, basically, our lecture starts. I was just refreshing in your brain that how these accounts are made. These whole system should be known to you at the inter level. But whatever knowledge is required, I have just told you. Now, let us start. What is backflush accounting? Now, in the traditional, let us call this system as traditional cost accounting. Okay. In traditional cost accounting, the recording takes place from the beginning. Recording of the transactions takes place from the beginning. What does it mean? When you purchase the raw material, the journal entry is passed. When you issue raw material and work in progress, when your raw material is transferred to production and the goods are getting formed, the goods are getting made, then you pass an entry. Whatever conversion cost, wages, overheads, even if there are some wages account, if some wages have been incurred, you can make an account for the same also. Then wages will also be transferred here. Then you do the valuation of work in progress. See, your work in progress valuation is 1,40,000, out of which 1 lakh amount worth of rupees goods have been formed, finished goods. Then you value finished goods. So it is a gradual progression and you pass entries. Now, in backflush accounting, instead of going in this direction, forward direction, you are going to move backwards. That is, you will not pass entries until, listen to this carefully, you will not pass any entry unless your finished goods have been made. That means, when there is a work in progress going on, you will not pass any entry. Now, whatever I will mark with red color, that account will not be made in backflush accounting. In backflush accounting, there is nothing as work in progress. You directly create finished goods stock account. The purpose, I will tell you why we do this. First of all, understand what we do in backflush accounting. In backflush accounting, we flush in backward direction. That is, once the goods are being made, then we register, then we record the valuation of finished goods. That means once finished goods have been made, then this entry will be passed. Which entry? This entry will be passed. And since work in progress account will not be made, then what will happen here? What entries will be made? Instead of directly transferring raw material, instead of directly transferring raw material to work in progress, now we will move backward to raw material, we will move backward to finished goods. How? I'll show you. Instead of writing 1 lakh, yes, I will remove these lines, don't worry. Okay, first let's try to understand that instead of transferring raw material to work in progress, we are going to move backwards. That is, we will pass entry in finished goods stock account that this much worth of finished goods have been made, standard cost of finished goods have been made, and raw material is used this much, overheads that should have been incurred this much. These entries, instead of passing to work in progress, then from work in progress it goes to finished goods, we will directly pass it to finished goods. Now the question arises, ma'am, then if, see, why do we make work in progress account? Because there might be some goods, like if, for example, in this our example, 40,000 worth of goods are still not complete, then where that will be registered? So that means backflush accounting cannot be used every time. If you want to record directly to finished goods account, that means from all the raw material you should be able to manufacture all the finished goods. There should be no work in progress. Answer is yes. Backflush accounting should only be used when there is generally no stock of work in progress. As soon as raw material is purchased, it should be used to manufacture directly to finished goods. And the production process should also not be so long. It should be small. The processing time should be less. Then this method of backflush accounting will be valid. So again, in this whole process, what is going off in backflush accounting? Work in progress account we will remove. Why? Because there will be not as such any work in progress. Raw materials are immediately converted into finished goods. There will be no balance brought down or carried down of your work in progress. All whatever raw material is used, you directly transfer to finished goods. Whatever overheads should have been incurred will be transferred to work in progress, and rest all accounts will be made as such. Whatever overheads have not been absorbed, which is your loss, will be transferred to costing P&L or costing P&L. Okay, so this is what you're supposed to do. Rest all entries will be same. Raw material when purchased will be passed here, but only which account will be not be made? Work in progress stock account. Okay, so first question, in backflush accounting, which two stock accounts are made? Raw material stock account and finished goods stock account. Raw material stock account is termed as, in backflush accounting it is termed as raw material in raw material in process account, and this is called as finished goods stock account. That the name remains the same and other accounts will remain same. So now the question is, when should we be using, when is backflush accounting used? It is used when your raw material is directly converted into finished goods immediately. Generally there is no work in progress as such, no work in progress stock is left, everything is immediately converted. If you have heard about just in time, we have already taught you what is just in time. Just in time means that when the customer gives you order, you go to market, then you buy raw material and immediately convert into finished goods and supply it to customer. So under just in time process, you do not keep a lot of stock of raw material, or work in progress. When the customer places an order, then you just in time, at the same time you buy the raw material stock and process it and give it to customer, deliver it to customer. There backflush accounting is useful because you don't need to keep work in progress account, since you do not have the concept of having work in progress. So when an organization uses the concept of just in time, they should prepare their cost records as per backflush accounting, where there is no work in progress account, and always keep yourself reminded why cost records are made, to know the standard cost of finished goods or cost of goods sold. That is what should have been the cost of finished goods and cost of goods sold, because accordingly billing is done. Now, why is it called back flush? Why we are moving backward? Because instead of knowing, please understand this also, instead of passing how much raw material is used in finished goods, we pass opposite entry. Means opposite here means, now I should not be saying opposite, I should be saying first we pass entry in finished goods. Once finished good is made, then entries are passed. And always remember, here entries will be passed as per standard cost. Now if you want to know, for example, if you want to know yes, if you want to know that how to know, suppose finished goods are produced 10,000 units, suppose, okay, and you know bill of material. What is bill of material? Bill of material is a document which in which we write how much what quantity should be used, which unit should be used, and how much unit should be used of raw material in order to manufacture finished goods. So bill of material records the quantity, the shape, the sizes, in how much quantity it should be used to manufacture finished goods. So it is basically telling you the standard cost of raw material that should be used in finished goods. So from bill of material you can get to know that suppose for example rupees 5 per unit raw material should be used. Now since you have manufactured 10,000 units and 5 rupees raw material should have been used, so basically 50,000 rupees raw material should be used. So you will pass entry here. Here you will write, where my red mark is there, you will write here to raw material account 50,000, and that raw material will come from raw material account from here. Okay, so that will be written here. Then a question will tell you how much overheads or conversion cost should be incurred, that will be written here. So always remember finished goods. So you do a back flush accounting. First you value, again let me repeat, first you value finished goods, how many finished goods you have made. After completion of finished goods processing, after making finished goods, then you do the recording. That is the first feature of back flush accounting. Second feature, what do you record? Actual cost or standard cost? Obviously in costing we record only standard cost. So how do you get to know the standard cost of 10,000 units? So you have to go through bill of material. There you will find how much raw material should have been used. Then you will pass entry here that this much of raw material has been used in finished goods, and then a corresponding entry will be made in raw material in process account. Question will tell you how much overheads should be applied, should be standard cost, that same entry. So work in progress we will remove, and directly entries will be passed in finished goods. Now without making it more complicated, we will do a question now. Okay, in that question you have to solve the question through traditional system also of recording, and then you have to do the same question or with the help of your back flush accounting also. So one thing you should always remember, that back flush accounting should be used only where you follow just in time process, where customer places order, then you buy raw material, immediately you process it also, you make finished goods also. So entries are passed after finished goods are manufactured. MCQ can be asked on this, that back flush accounting starts when raw material is put into process. No, it starts when finished goods are made, then you pass entry. Okay, so let's do a proper question. Before doing a question, I want you to write down what we have just solved. I'm just making it cleaned up for you. Please pause the screen and write down the example. This was we were trying to solve this question through traditional accounting, right? So please write down. This is your traditional cost accounting. Please write it down, the example. I'm going to scroll the page. First Pause the screen, write it down. I'm scrolling the page. Pause the screen, write it down. I know it is a bit confusing, but once we do a proper question, you will get it better. You will get a better hold of what is the difference between backflush accounting and traditional cost accounting. I'm scrolling the page. Pause the screen and write it down. In theory, we are going to learn everything about backflush accounting, where it is to be applied, what are advantages and disadvantages. So I'm not focusing on that much, but you should be having an idea that backflush accounting is used only in where just-in-time system is adopted. Yes. So yes, let us now go back to a proper question. Let us start a question now. This is a question concept backflush accounting. Let us see this question. Dandiya Limited. Now this question will help you to figure out the difference between traditional cost records and backflush accounting. Some students might be thinking that at inter level we have not learned how to prepare accounts. So let us leave this chapter. Please do not leave. Whatever I have just told, that much is only required. In-depth questions are not required to be solved. You're not supposed to make traditional cost accounts. You're supposed to do backflush accounting, which are simple questions. Okay. So don't feel that we need to learn that chapter first in detail and then we will do this. No, not required. Okay. So let us do this. Dandiya Limited follows just-in-time system. So that means Dandiya Limited takes the order from customer and then only it starts the purchasing part. It purchases raw material, does processing immediately and then delivers it to the customer, and then it will do the recording under backflush. It has following transactions in May 2021. Raw material purchased were 2 lakh. Direct labor cost incurred 36,000. Actual overhead cost is 3 lakh. Conversion cost. Now what is a conversion cost? Conversion cost, which is in short form is called CC, is a sum of direct wages plus overheads, right? So conversion cost applied. Now what is applied? Applied, they are trying to tell you the standard cost of conversion cost is 3,16,000. All materials that were purchased, 2 lakh rupees were placed into production. Okay, so whatever raw material we have purchased, we have used in production, and production was also completed and sold during that month. Obviously this is just in time. We do not keep any stock. We do not put our money in the stock. Our stock turnover ratio is high. We buy the stock, we convert it, we buy, we convert it. We do not keep lot of stock. The difference between actual and applied is computed. You are required to pass both traditional journal entries and backflush journal entries. One more thing. In backflush accounting, you're not supposed to make accounts. You're just supposed to pass the journal entries. But it is first better to understand with accounts, and then we can pass the journal entries very quickly. Okay. So first I will make accounts, which will be done in just seconds, and then we will see what entries will be passed. Okay. So let us now prepare accounts. First we are going to solve it. We have to do the traditional method. So traditional cost records, right? So let me first make the accounts. Now let us solve the question. Now let us solve the question first with traditional cost accounting, cost records. So the first transaction is given to us raw material purchase. Now in traditional system we make work in progress account also. So let us pass entries. Raw material purchase 2 lakh. Okay, not a problem. Let us write here. Raw material stock account. How much raw material is purchased? Raw material purchased is 2 lakh. So let us write 2 lakh here. Now raw material can be purchased with cash also, or it can be we can take it on credit also. So we can write here cash account, or we can write this account as cash account, or we can make it as creditors account or accounts payable account. So in your book they have written as account payables. Okay, payables account. So very simple. Now let us write here. This is going to be raw material account payable. How much raw material you have purchased? 2 lakh. And here it will be written raw material stock account, right? And similar and journal entry can be also passed. So we can simultaneously pass the journal entries also, because we are asked to pass journal entries. So your stock is increasing, raw material stock is increasing, so entries are journal entries. If we write here, journal entries are going to be like this. And I hope you know journal entries. Below journal entries you are supposed to write the narration also. Raw material stock account, debit to account payable account. How much? 2 lakh. And here also 2 lakh. Being raw material purchased, right? Now let us pass on to the second entry. Now we have purchased raw material. Our raw material stock has increased. Now direct labor cost incurred 36,000. Okay. So it is an expense account. Let us write here an expense account. Direct wages account. The way you have overhead account. Overhead is indirect expense. These are direct expense. Now this is an indirect expense. Overhead account. Now direct wages have been incurred. Either direct wages you have paid in cash or it is still outstanding. So we are using a common account as account payable account. This account, outstanding amount. So we are assuming direct wages are still outstanding. So how much is direct wages? 36,000, right? Okay. So direct wages expense. Expense, when it increases, expense account is debited. So it is going to be, to account payable. Let me write it properly. To accounts payable. How much? 36,000. And here it will be again by direct wages 36,000, right? Now again, any other expense, they are saying actual overheads incurred is 3 lakh. Fine, not a problem. Actual expenses are how much? 3 lakh. So fine, let us account that also. These entries will be passed in the backflush accounting also. Okay, only work in progress account will be missed out. That is it. Again we are assuming expenses are still outstanding. So to accounts payable 3 lakh. And here also by overheads control account 3 lakh. Okay. So we have written here both things. Now we should also pass the journal entry simultaneously. First entry, direct wages has been debited and accounts payable have been credited with 36,000. So let me write the same also here. Direct wages account debited with 36,000 to accounts payable 36,000. Let me write it on the credit side. You can prepare a column also here. $36,000. Let's write a narration also. Being direct labor cost incurred. Okay. Third is overheads. Overhead control account. You can also simultaneously start writing with me. 2 accounts payable 3 lakh, right? And below we can write the narration. Being overheads incurred. Okay. Now going back. So still our valuation of work in progress and finished goods have not yet started. Now they have told you how much conversion cost is applied, that is how much should have been the direct wages and overheads, 3,16,000. Just leave it for some time being. Let us read what is written below. It is written all material that were purchased were placed into production. So let me first pass entry for this, that is whatever raw material has been purchased, that has been put to production. So that means all this raw material has been passed to the production floor for the production process. So now it is no more in the raw material warehouse, it is now gone to the production. So let us transfer the same. So we will transfer this raw material to work in progress. We are preparing traditional cost records. So work in progress account. Now work in progress account. To raw material, how much all raw material has been transferred here? So here I will write by work in progress account 2 lakh, and here it will be 2 lakh. Raw material stock account. Right? Now let us pass the entry also. So work in progress stock account will be increased and raw material stock account will be credited. So let us write the same. Okay. So fourth entry will be work in progress stock account to raw material stock account. Here it will be debited by 2 lakh, right? So whatever raw material were issued to production, we have recorded that. Now let us see what question says. Question is saying, yes, all materials were purchased and placed into production, and production was also completed and sold during the month. The difference between actual and applied is computed. Okay. So whatever production was done, it was completed. That means whatever there will be in work in progress, it will be transferred to finished goods, and whatever will be in the finished good, it will be transferred to cost of goods sold account, because whatever has been produced has been sold also. So what we were working on has been finished, and whatever we were finished goods have been sold. But we have to first of all value work in progress, and always remember work in progress or finished goods are valued at standard cost. So let us find out the standard cost. Now the question is saying conversion cost. Conversion cost is how much? It is clearly saying conversion cost is, standard conversion cost is 3,16,000, right? Now standard conversion cost is comprised of standard. Why standard conversion cost? Because applied word is used. Conversion cost is a sum of wages plus overheads, right? Now we know wages are how much? 36,000. So that means this will come as balancing figure. Now if you see in the calculator, $3,16,000 minus 36,000. So balancing is 2,80,000. So basically 2,80,000 is your standard overheads, which should have been incurred, but you have incurred 3 lakh overheads, right? You have incurred 3 lakh overheads. Now from this whole computation, we have understood that the conversion cost which we have to transfer here to work in progress should be how much? Conversion cost that we should be transferring here should be not more than 3,16,000. So what we are going to do, direct wages we are going to transfer 3,16,000 here, and overheads we are going to transfer only 2,80,000, and rest will be our under absorbed overheads loss. So let me transfer here to work in progress, by work in progress account 36,000. So my work in progress account will receive two wages. How much wages are applied? 36,000. And now to overheads we have to say now to by work in progress account only 2,80,000 will be transferred, and rest 20,000 I am putting a question mark, that is our loss, which I will tell you where to transfer. Okay, so here it will be 2,80,000. So basically total conversion cost, total CC we are transferred 3,16,000, right? Okay, now this total whatever work in progress has been created, which is how much? Total work in progress created how much? 2 lakh plus 36,000 plus 2,80,000, 5,16,000. This work in progress is completed. So we are going to transfer this to finished goods stock account, right? So here we are going to write by finished goods stock account, which is 5,16,000. And here I am going to write, here it has been credited, now finished goods stock is being debited because it is, this stock is increasing now, to work in progress account by 5,16,000, right? Okay, we are not preparing proper format of accounts because we are not supposed to make accounts. I am just teaching you how entries are created. Okay, once you have learned, then and we will just focus on passing entries only. In the next question we will just pass entries. Okay, so work in progress we have reached. Now question has said whatever we have manufactured we have sold also, so not a problem. Now we are going to make cost of goods sold account, and here whatever we have manufactured we are going to transfer here, right? Yes. Okay, so let me write here by COGH 5,16,000, and here it is finished good stock account 5,16,000, right? Okay, so cost of goods sold is done. Now what we are supposed to do, we have a loss and we have a cost of goods sold. Rest everything, whatever raw material we have purchased we have transferred to work in progress. There is no work in progress stock also. So what we are going to do is we are going to transfer this loss to where? Now in your book they have not transferred, please listen to this carefully. In your book you will find that cost of goods sold otherwise should have been transferred to costing P&L account, but your book has closed accounts here itself only, that is they have transferred this loss to cost of goods sold account only. They have transferred this loss to cost of goods sold, which is wrong. Cost of goods sold is transferred to costing P&L, and there the loss is transferred, but they are transferring directly to cost of goods sold, and they are skipping the procedure of making costing P&L account at final level, because the purpose is to teach you backflush accounting. So we will also do the same because your book is doing. Otherwise what we are going to do, we are going to transfer this cost of goods sold to costing P&L, but we are skipping this step, okay. And what we are going to do, we are going to and this loss should have been transferred to costing P&L, but instead of doing that we are transferring this loss directly to, just a second, yes, we are transferring directly this loss to COGHS. So it is going to be like this now. So this loss or under absorbed overheads will be transferred to cost of goods sold, but the correct way is to transfer this to costing P&L. If you open up your interbooks, you will get to know. So here we are going to write to overhead control account 20,000. Okay, so this is how you're going to do, and entries are finished. These much entries, we are not supposed to close the accounts, we just have to pass the entries of what we have been told. Okay, so let us pass the remaining entries. Now focus on passing the entries now. So work in progress was increased because raw material was sent to production. Now if you see here, work in progress stock value has increased by wages 36,000. And overheads by work in progress standard cost has been increased by overheads 2,80,000. So let me pass the entries. Work in progress account debit with wages and overheads. Okay, let me pass this entry. Work in progress stock account to wages account to overheads control account. How much it is? 3 lakh debited, 3,16,000, out of which 36,000 is your wages and 2,80,000 is your applied overheads, being conversion cost. Yes, conversion cost applied, right? Then this work in progress, please observe here. This work in progress, whatever work in progress was prepared, this was transferred to finished goods. So work in progress account will be credited and finished goods account will be debited. So same I am going to do by 5,16,000, right? So sixth entry will be, now finished goods account will increase, the stock will increase by 5,16,000 to work in progress account 5,16,000. Then you will observe here, we can write being completion of goods. Then next entry will be what? Next entry, I hope now you are understanding better. Finished goods, please observe finished goods. Now all finished goods manufactured are sold, so cost of goods sold account debited to finished goods stock account, right? Seventh entry, cost of cost of goods sold account to finished goods stock account debited this 5,16,000 being cost of finished goods sold transferred. Now the last entry which I have told you that we are supposed to pass, we should have transferred this loss of overhead. We should have transferred this loss under absorbed overheads to costing P&L, but they have not done effort in preparing costing P&L. They are directly transferring this loss to cost of goods sold. So even though this is cost, but still it is, they are making adding loss to it. So cost of goods sold account debited with this loss from overhead control account. So this is our last entry we have to pass. Eighth entry, cost of goods sold, how much? 20,000 to overhead control account 20,000. Now this is under absorbed overheads. You can write being under absorbed overheads or variance. It is adverse variance. What the cost should have been and what cost has been incurred. Cost should have been 2,80,000 and you have incurred 3 lakh rupees. So 20,000 is your loss. So that is a adverse variance. So being, you can write like this, being variance recognized. Okay, now this was your traditional way of recording entries. Okay, but we are not focusing on traditional way of recording. We need to learn how to do backflush recording. Now backflush journal entries are passed by whom? Just in time organizations, the organizations which follow just in time, because they do not have work in progress stock. They directly purchase raw material and directly do the manufacturing. Everything which is purchased is manufactured and sold. It's a customer pull manufacturing. Customer gives you order and then the manufacturing process is pulled. Okay, so we are in under backflush accounting. I have told you this account will not be manufactured, this account will not be prepared. So that means instead of passing entry here, we are going to directly transfer this entry to finished goods. Raw material 2 lakh will be transferred here. Instead of wages and overheads control account, you can directly make one account conversion cost, or you can make two accounts also. It's equivalent. So in your book they have made, because backflush accounting has a purpose of reducing entries. They do not want to make so many accounts, but it's an optional. You can make direct wages and overheads, and instead of transferring here, you can directly transfer to finished goods account, or you can directly make one account conversion cost account. Okay, and then account payable and then COGHS. Okay, so now let us make accounts for backflush accounting. Now, to be honest, the backflush accounting says this is one of the variant. What am I writing? Variant. You will understand once we do the second question. This is this type of entries that we are going to pass is one of the way of passing entries in backflush accounting. There is another way also, which is a much easier way. Okay, so this is variant 1, and in another question we will be doing variant 1 as well as variant 2. Okay, so how backflush accounting is done? Backflush accounting says that you have to pass entries once finished goods have been manufactured. Okay, so one of the accounts is finished goods stock account. Now how entries are made? They say when you purchase raw material, then you pass entry. When you purchase raw material, you pass entry. Okay, so for 2 lakh rupees, you are going to pass entry. So this is your raw material. Now in backflush accounting, we call it raw material in process account, because we do not have tendency to keep raw material stock also, because backflush accounting is used where just in time is followed, and just in time suggests that you do not keep any stock of raw material. So instead of saying raw material stock account, we call it as raw material in process account. Now you have purchased raw material, so you are going to write here to account payable 2 lakh, and under accounts payable account, you are going to write here by raw material in process account 2 lakh. And I think I have done a little mistake in the first traditional method. All these three entries were not supposed to be done on the debit side. They were supposed to be done on the credit side. Let me write here by raw material stock 2 lakh, by direct wages 36,000, by overheads control account. Please, you also don't, obviously you will not do this silly mistake. Okay, now going further in our backflush accounting, so we have under backflush accounting, it says that you pass the entries of if any raw material purchased. Now what you're going to do, these are your either you can make wages account or overheads account, or you can directly make CC account, that is conversion cost account. Now what are you going to do is, now the overheads, labor cost or overheads cost have been incurred and applied how much? 3,16,000. Now how the entry will be passed? Back flush accounting says that you have to move backwards. So we are going to value finished goods first. How we are going to value finished goods first? We know that on finished goods, question has stated very clearly that on finished goods standard cost is how much? Raw material cost is 2 lakh and CC, that is conversion cost applied, should have been 3,16,000. So total is 5,16,000 they have mentioned to you. Please check. They have said that on the, see here, on conversion cost applied 3,06,000 standard cost and raw material is 2 lakh. Conversion cost includes direct labor as well as your overheads. So we are going to do back flush accounting. That is, we are going to value finished goods first at standard cost. So here I am going to write the value. Raw material in process is 2 lakh and conversion cost is 3,16,000. Account. Okay, and then we are going to post here the respective account entries. Here it is debited, to here it will be credited. So buy finished goods stock 2 lakh and here it will be, since here it is debited, it will be credited here. Buy finished goods stock 3,16,000. That is why it is called back flush accounting. Once finished good is made, from bill of material you check, how much raw material should have been incurred, how much overhead should have been incurred, then do the valuation of finished goods, post the respective entries and then check how much have been incurred, how much have been incurred. Now let me check how much conversion cost has been incurred. Conversion cost is a sum of labor and overheads. Labor has been incurred 36,000 and actual overheads have been incurred 3 lakh. So actual cost is 3,36,000. So now I will post entry here to account payable. How much I have incurred? 3,36,000 conversion cost, right? Which includes direct wages and overheads. And here I will write by conversion cost 3,36,000. And here there is a loss of 20,000 which we will, now remaining entries will be same. What will happen now? From finished goods, all whatever has been made is been sold also. So we will transfer this to cost of goods sold account. So by cost of goods sold account 5,16,000 and this account will close down. Then we will post this entries here. Here it is credited, so here it will be debited. So cost of goods sold. Now here it will be to finished goods stock account 5,16,000 and this loss from here will be transferred to cost of goods sold. So to CC account 20,000. Now these all entries will be passed. Obviously this whole amount, and let us not balance the account. This will be transferred. This whole cost will be transferred to costing P&L, but we are not supposed to make accounts. We are supposed to pass entries. So this will be the entry. Now what you have to learn here, that back flush accounting, when we are going to do theory, it will say that back flush accounting, the recording of entry starts once the finished goods have been made, then their standard cost is recorded, corresponding entries are also made in the respective accounts, and that is how it is done. And work in progress account is not made because there is no work in progress. Okay, and raw material stock is also not there. Raw material in process account is there. So let us pass these entries. Now without seeing your accounts, let us pass the entries. Okay, so let us write here back flush accounting entries. Let us pass the entries. The first entry will be what? Your first entry will be raw material that you have purchased. So raw material work, let me write completely. Raw material in process account debited to accounts payable How much? It is 2 lakh, right? Being raw material purchase, right? Then whatever cost you have incurred, direct wages and indirect wages, you can see here. Conversion cost, what conversion cost you have incurred? 3,36,000 is your conversion cost that you have incurred. So conversion cost account debited to accounts payable account, 3,36,000 being conversion cost incurred, being conversion cost incurred. Then third, now the main part, finished goods. Now let us see here the entries. Finished goods have been valued at how much? From your raw material in progress 2 lakh and conversion cost 3,60,000. So entry will be finished goods stock account debited with these two, right? This is a standard cost. So finished goods even word stock can also be removed from here, because you in just in time we do not keep the stock of finished goods also, we directly sell out also, so that can also be removed from here. Debited to raw material in progress account to conversion cost account. How much it is? 5,16,000, out of which raw material is 2 lakh and other is 3,16,000. Being completion of goods, being completion of goods. Then fourth is, after making the finished goods, you are transferring the finished goods to cost of goods sold account. So cost of goods sold account debited to finished goods stock account, right? And let us write the same. Cost of goods sold account, you can write completely also. When you are supposed to just pass the entries, the questions time taken by question will be very less. Cost of goods sold account debited to finished goods stock account. You can remove the word stock also, you can keep it also, that is not the main part. Being cost of finished goods sold transferred. Then last is the loss, the variance of overheads which has been transferred to cost of goods sold. So cost of goods sold account debited with 20,000 to overheads control account, or conversion, in our case it is conversion account, right? Conversion account, conversion cost account, 20,000 being variance recognized. So either you can make conversion account one account, or you can bifurcate this account into two parts, direct wages and overheads. It is not wrong, okay? So then direct wages will be transferred to finished goods and overheads applied will be transferred to finished goods, okay? So what have you learned out of backflush accounting? One thing, backflush accounting, you do not make work in progress account. It is used where just in time policy is adopted, where demand pull production process is there. When the demand from customer comes, then only you purchase raw material, and whatever you purchase, you do not keep any stock, you just manufacture it and sell it off. Secondly, here the recording of entries takes place. Listen to this carefully. Recording of entries takes place once the finished goods are manufactured. Then finished goods entries are made and accordingly. Okay, so this is the difference. Now you please write it down, and once we do one more question, it will be better clear in your head. Okay, this is a very simple chapter, so you should not get terrified with the entries or the accounts. Okay, so please write down. Let me, yes, I'm enlarging the screen. Please write it down. This is the question. Pause the screen and write it down. I'm scrolling the page. Pause. Don't write general entries now. First pass the entries. Okay. Pass the entries. I'm scrolling the page. Pause the screen and write it down. Pause the screen and write it down. I have not much focused on this variant 1 part, okay, because there will be variant 2 also. Whatever you have learned, just remember that is backflush accounting. We will teach you another way of also recording entries that is much easier than this system. I'm scrolling the page. Pause the screen and write it down. I'm scrolling the page. Now write the general entries starting from traditional way. This is your traditional cost accounting. Yes. Pause the screen and write it down. Pause the screen and write it down. I'm scrolling the page. Pause the screen and write down the entries. I'm scrolling the page. I'm scrolling the page. I'm scrolling the page. I'm scrolling the page. Write it down. I'm scrolling the page. Okay. So now let us move on to the next question. Now please observe the next question, that is question number 19. Now this is also on back flush accounting, but here we are going to discuss both the variants, variant 1 and variant 2. Now no more focus on traditional cost accounting. We are going to do only back flush accounting. Now back flush accounting tells us that the accounting entries are supposed to be entered after production process has been done. So this question will finally help you to understand completely what is back flush accounting. So this is a proper question, mark it as important, can be asked as a proper comprehensive question in your exam. So let us start doing this question. Now this question says a manufacturing cost information for March for a division of XYZ companies as follows. So manufacturing cost information is given to you for the month of March. In the month of March, you have purchased raw material this much, labor and overheads are this much. So let me add the conversion cost. What is conversion cost? Actual. So conversion cost actual is how much? 2800 plus 1640. So it is coming out to be 44440. So it is 4440 actual conversion cost, right? Then they are saying activity in March. Now this activity is represented in units. Finished goods manufactured during the period. See, now they are telling you how many units of finished goods have been manufactured. Okay. Sales, out of this 180 units, 145 units are sold. These are units produced and these are units sold. And they are telling you the standard cost. I have been mentioning this from the very beginning that in our cost records, whether traditional, whether back flush, we just try to find out standard cost. And they are telling you standard cost, material is 20 and labor overheads, let us add this up, labor overheads 15 plus 9 is 24 rupees. This is your conversion cost, standard conversion cost, right? Standard. And raw material cost is 20. And now the question says, there was no opening stock of raw material, work in progress or finished goods. It should be assumed that there are no direct material variances. That means whatever variance you have purchased it at correct price for the period. Show the relevant journal entries and ledgers in variant 1 and 2 of back flush system. We have taught you variant 1. Let us solve it with variant 1 and then we are going to do variant 2. Another thing, what the question is asking, they are asking to enter past journal entries as well as prepare ledger accounts. So now proper ledger accounts will be prepared. Okay. So just to fasten the speed, I have already prepared the ledger accounts. So let us observe how entries will be passed. See, we have to do back flush accounting. Work in progress stock account will not be made. Work in progress stock account will not be made. Okay. Entries will start, we will start passing when finished goods are made. Okay. Only raw material, purchase of raw material entry will be made. Okay. So raw material can be purchased in cash, through creditors account, payables, any account can be used. So let us observe how entries will be made. Now this is your account which I have made here. This is your raw material in process account, right? Raw material purchased, here it is written, to creditors you can write, or you can make to creditors account, or you can make, here they have not prepared creditors account because that is a financial account, otherwise you can make it creditors account, or you can write here accounts payable. Okay. Now raw material purchase account entry you have passed. Now what we are going to do is, Now wait for the finished goods to get manufactured. Okay, fine. Finished goods have been manufactured. How many finished goods have been manufactured? 145 units. Sorry, 180 units. On 180 units, 20 rupees of raw material should have been used. So if you calculate on 180 units, 20 rupees multiply, if you multiply, it is 3600. So total cost comes out to be 3600 rupees, standard cost. Then this is 24. So 24 into 180 units, 4320. So if we go back and see, don't make conversion account now, don't make it. Directly start making first what account? Finished goods account. Okay. Now in finished goods account, you will do the valuation. Raw material in progress account 3600 and 4320. See, this is the calculation we have done. 3600 and 24 into 180 units. We can write it here. This is 180 units into 20 rupees and this is 180 units into 24 rupees. These many goods have been manufactured. Now this corresponding entry will be made in conversion account. Conversion account. Okay, same entries. There debit, here credit. Okay, by finished goods account. Yes, by finished goods account 4320. You can see 4320 here and here also it is 4320. Now since you have finished goods have been manufactured, now also to the corresponding entry. This was the finished goods which should have been incurred. This is standard cost. But what was your actual conversion cost? What was your actual conversion cost? So obviously you can, for bookish purpose, you can pass the entry before. But normally under backflush accounting, accountants start passing entries after finished goods have been prepared. So finished goods have been manufactured. Obviously when raw material is purchased, entry is passed immediately. But whatever conversion cost, labor is incurred, whatever the overheads are incurred, no entry is passed until the finished goods have been manufactured. Okay. Now how much actual creditors are being, how much conversion cost has been incurred? Now conversion cost actual has been incurred how much? It is written here, labor and overheads. Actual conversion cost. Can you see? Actual conversion cost is how much? 4440. So it is 4440. Obviously, either you have paid this actual conversion cost or it is still outstanding. So it can be like, it can be either, you can write here accounts payable also. Okay. So it can be like this also. Now finished goods have been manufactured. Now is all finished goods manufactured sold? Let us check in the question. In question it is written finished goods manufactured are 180 but sold are 145 only, 145 units only. So fine. Now cost of goods sold is also valid at standard cost. Now the goods which are sold, that will be transferred to cost of goods sold but at standard cost. Standard cost is 20 and 24, not a problem. So what we will do, you will transfer from this cost, only this represents cost for 180 units. This represents cost for 180 units. Now just a second. This represents cost for 180 units, right? Now we are transferring cost of we have to write here 145 units cost. Now how much will be 145 units cost? Now total cost is 44, right? So we'll multiply with 44. 145 into 44, it is 6380. So it is 6380 transferred to cost of goods sold. You can see cost of goods sold. Cost of goods sold 6380 and here also corresponding cost of goods sold 6380. Can you see this? Okay. Now balance carried down because we have not sold all the cost of goods sold. So this is balance carried down. Now cost of goods sold. They have mentioned you the sales. Just a second. Yes. So sales value is not mentioned here. Now buy sales they have written here, but this is wrong. This should have been transferred to costing profit and loss. Here the correction is that you transfer cost of goods sold to costing profit and loss account. But still, even if you are not transferring it, then there will be a balance here. But they have written here that sales are 6380. Okay, just to close the account they have written here. Now this is the trial balance, that is raw material, work in progress, and finished goods. Finished goods stock left with you is 1540, and raw material stock is also left with you. How much? 6850. Can you see this? And conversion cost loss, this is a loss, right? This is the loss. This is unabsorbed overheads. This should be transferred either to cost COGS or costing P&L when the costing P&L is made at the end of financial year. So it is written in the note, the stock balancing at the end of balance on the conversion cost will be carried forward and written off at the end of year. Written off it, why? Because it is a loss. Now what entries will be passed? Whatever you have done, those entries will be passed. So ledgers are made, no work in progress account. I started making finished goods account first. I passed here the entry standard cost and then transferred to cost of goods sold only that item which is sold, right? So same entries we will also pass. So raw material was purchased, so raw material purchase account, 2 creditors. Conversion cost actual, this represents actual. This also represents actual. Now finished goods represents, see here it is written, this is your standard cost. And last is whatever goods you have sold, that is transferred from finished goods to conversion cost of goods sold account. These are the entries. Is it clear? Now we have to do variant 2. Now variant 2 is much easier. Variant 2 is much easier. Just a second. Under variant 2, let us talk about variant 1. Please pay full attention to me. This was a very simple question. Okay, you will write it down also. Just listen to me first. Under variant 1, you have removed work in progress account, right? You incur raw material cost, you incur conversion cost, then you value finished goods only at standard cost. If there is any under variance, that is transferred to costing P&L. Okay. So you value finished goods and you also pass entries of raw material purchased, right? But under second variant of backflush accounting, they say that let us make it more easier. Let us make it more easier, and under the second variant, variant 2, variant 1 versus variant 2 of backflush accounting. Under variant 1, entries are passed at 2 times. When raw material is purchased, then you pass entry. When wages are incurred, overheads are incurred, no entry is passed until finished goods are manufactured completely, then you pass entry. These are the trigger points when you pass entry, when you pass entry, right? Under variant 2, backflush accounting, entries will be passed only when finished goods are manufactured. No entry will be passed when manufactured. No entry will be passed when raw material is purchased. No entry will be passed. Only one trigger point is there to pass entry. So when is the entry will be passed under variant 2? When you purchase when you make raw material completely, then pass entry. Raw material purchased, entry is not passed. Hence, raw material in progress account is not made. It is made, but is not made in regards to raw material purchased. That entry is not made. because this variant 2 says that we just want to know how much standard cost is there of finished goods manufactured. That is it. So they pass entry after making finished goods. So what happens is that partial accounts are made. Like you made raw material in process account. So whatever raw material you have, you will show here, only this raw material will be shown 3600, which you are going to find out when finished goods are made. But you have purchased how much? 4250. So this balance carried on will not be visible, because total raw material purchased will not be shown under variant 2, because under variant 2 entries are only passed when finished goods are made. When raw material is purchased, no entry is passed. So partial entry will be shown. Ma'am, what will happen? I'll show you. Now this is your variant 2. This is your variant 2. Okay. Now what entries they have passed? See what entries they have passed. If you observe, finished goods manufactured 180 units at the rate of 20 rupees is the material, and 24 rupees was your conversion cost, right? See here, 20 rupees material and 24 rupees is your conversion cost, standard conversion cost. So entry is passed. So this entry, if I show in your accounts, what will happen? This is finished goods. Finished goods will show raw material in progress and conversion cost. How much? 3600 and 4320, right? And in your raw material in process, you will see finished goods of only 3600 here. Raw material purchased will not be shown. Balance carried down will not be shown. This is missing. Okay. And from finished goods only you will transfer cost of goods sold, which is transferred. That is your only how many units? 145 into 44, which is 6380. So this will be transferred here, this much. And this 4320 entry, conversion cost entry will be passed. So basically, as per variant 1, all accounts will be made except raw material in progress. What will not be made? This entry will not be passed, this entry will not be passed, only this entry will be passed. Conversion cost account will be made, that will be made, okay, because that is there, its entry is made after finished goods are manufactured. Finished goods account will be made, cost of goods sold account will be made, everything will be made, only raw material purchased entries will not be passed. Now I have 2-3 questions for you. I hope you will understand. Let me ask you, under variant 1, you used to pass raw material purchased? Yes, ma'am. You used to pass conversion cost entries when wages were incurred? No. When finished goods were manufactured, then this account was made. So this account will still be made in variant 2, because this account is made after finished goods is manufactured. But this account will not be, this entry will not be made, because raw material purchase account entry is not passed under variant 2. So in nutshell, if you have to see here, BACKFLUSH accounting is to be used when you follow just in time. If you want too much of simplicity, you go ahead with variant 2. If you want too much simplicity, go ahead with variant 2. Just prepare predominantly finished goods account and cost of goods sold account and conversion account. That is it, simplicity. If you want, and raw material in process account partially, not the raw material purchase entry is not passed. Here raw material purchase entry is also passed, conversion cost entry is also passed, here it is also passed, and finished goods COGHS everything is made. Okay, now when I will be teaching you in the next lecture the theory portion, there this will come. This is your theory lectures, you will get it. So here it is written, variant 1 has, see it is written, 2 variants of BACKFLUSH system are summarized below. Variant 1, this has 2 trigger points. That is when you are supposed to pass entry. Trigger point 1, when you purchase raw material components, raw material in process account will be debited with actual cost of material purchase and creditors account will be credited. And second trigger point, when completion of goods units, when you have finished manufacturing units, finished goods account will be debited with the standard cost of units produced and raw material in process and CC account will be credited with the standard cost. Under this variant, there will be two stock accounts, raw material and finished goods account. Okay. But there will be no work in progress. Variant 2, it has only one trigger point, that is completion of good units. Finished goods is debited with standard cost of units produced with corresponding credits through CC account and creditors account. Cost record excludes, you will not record raw material purchased but not yet used for complete production. Okay. Raw material purchased but not yet used for completion production, creditors for these materials and any price variance you will not record under variant 2. Okay. So this chapter is important from MCQ point of view also, and theory also we are going to study. These are the theory notes. I'll show you in the next lecture, but this is the practical portion. So please write down the answer. This was your question. Please write down the answer. Okay, this is the entries that we have passed. First we have prepared accounts and then we have passed entries. So I'm enlarging the screen. Please write down the answer. Pause the screen and write it down the answer. I'm scrolling the page. Pause the screen and write it down. These are the ledgers. This is variant 1. So raw material in process account will be made. I'm scrolling the page. Conversion account is made when finished goods are being manufactured. These entries are passed first and then this entry is passed. I'm scrolling the page. Pause the screen and write it down. This is finished goods account. I'm scrolling the page. Pause the screen and write it down. This is your variant 2. Only if you observe conversion cost entries are passed, finished goods, raw material in progress account is made but partially. You just have to know that what is the standard cost of finished goods manufactured, what is the standard cost of goods sold. This is the purpose only. Pause the screen and write it down. Yes, so we have understood practical portion of back flush accounting. Please, I would suggest you to pass general entries, practice passing general entries of variant 1 and variant 2. So please practice with your hand question number 19 and 20 so that I know you have understood the concept, but still there is a lot of scope of doing mistakes, and this concept can be asked in your MCQ and a comprehensive question can also be asked. So this much for this session. Have a nice day. Thank you.